This trade gave a perfect entry signal, but I couldn't take it because there was key news events about to hit, and waiting ended up being the best decision for the entire trade. My name is Bai. I'm documenting my journey to consistent profitability, wins and mistakes and all. Let's jump into the chart and check out this backtesting trade. I've turned the clock back to just before New York Open, and we can observe that on the 15-minute chart, we have a swing high and a swing low that has broken structure to the downside. So we are bearish. Since creating this low, we have been retracing back up the leg. This blue line represents the 50% level of this entire leg, specifically representing the premium area of this bearish leg. Ideally, we want to see price mitigate this level before continuing to move down. However, we can observe that we do have a weak high here that also coincides with Asia high. If we zoom in, we can see that this is a weak high because it failed to take the low. And so this represents that a weak high where liquidity may be resting. We can see that as New York's early morning hours start to open, we're close to mitigating this key level. We'll mark it out in a purple line to see how price reacts at this point. Here on the 1 minute, we can see the purple line representing the weak high, and price is about to mitigate. We'll play price out to see what kind of price action we observe. Now here we can see the mitigation. We can also see an aggressive move down from sellers that takes this demand though. Normally, this is a clear indication and confirmation of our entry signal. However, we can see that we have key news coming in at 8:30 today. Looking at the nature of the news, it doesn't look like it will move price all that much, but it is a red folder event. And so my rules say that I shouldn't enter any trades as we approach that key event. And so even though my entry signal has been presented, I can't take this trade according to my rules. And for me at this point in my journey, sticking to my rules is more important than catching what could be a winning trade. As we play price out after the news, we can see that price does tap into some type of supplier zone and continues to move price down. Looking back and in the moment, this feels pretty terrible because it feels like you missed out on the move. But I do know that 9:30 New York Open is coming, which is another area of key volatility. And if I can see price taking out this new high, it tells me that I could have another entry opportunity if my entry signals are confirmed. Here on the 5 minute, we can see that following 9:30 open, price did end up mitigating and liquidating that previous high we were targeting. At this point, I would jump to the 1 minute to see if I can get an entry confirmation signal. Here on the 1 minute, I'd want this demand zone ideally to get taken. If I was conservative, I'd want this demand zone to get overrun by supply. Let's see what price ends up doing as we play it out. Around 10:15, you can see that price flows below this demand zone that we were targeting previously. The question now is that if price retraces, where's the logical place where it can retrace to before hopefully continuing to move down? To answer this, I usually go to the 5-minute chart to see if I can get any fair value gaps. Now, we do have this one fair value gap, but it's so close to price, my stop loss will be pretty large. And so I'm willing to take a shorter stop loss in order to get a better price. For me, it can be this buy to sell candle right here. That means an entry at the bottom of that buy to sell candle stops over the high, and my final take profit lining up exactly with the external swing low, which I expect to get taken in a bearish order flow. This results in a crazy 7R trade, but I'm likely to take profits along the way. Let's play price out and see what happens. Maybe 10 minutes after placing the order, I'm tagged in. Let's see how price reacts and if we can hit our final take profit. By the end of New York session, I'm in profit and hopefully on my way to my final take profit. Now, with that said, I probably would have taken some profits off the table, definitely around this area where this low has been taken, as well as this fair value gap down here before I stepped away from the charts for the even. As we enter overnight hours, I move my stop to break even in hopes that price continues going down towards take profit overnight. Let's play price out and see what happens. And there, as we can see, during the Asia session, price liquidates the weak low of the 15-minute external bearish leg, just as we had expected. The trade results in a win, but the real lesson here isn't the setup. It's waiting for volatility to pass. Just because news wasn't as volatile as we expected this time, doesn't mean it won't be the next time. And consistent traders respect that risk. And I want to be a consistent trader. Patience is part of the model I'm building for myself. I'm not a guru. I'm just documenting my journey toward consistent profitability using market structure, supply and demand, and price action analysis. If you're on the same path, then subscribe and let's keep sharpening our edge together. If breakdowns like this help you see the markets differently, then check out this next video right here where I break down another trade. I'll see you there.